The time has come. According to Jerome Powell today, after the Jackson Hole meeting, Jerome Powell is the head of the Federal Reserve. He says that the time has officially come to start cutting interest rates on the next Fed meeting. So when exactly is that FOMC meeting going to be hosted? Let's go ahead and talk about this. I really hope that you guys learned something new in this video. And if so, please consider dropping a thumbs up and subscribing. I do want to remind you that I trade live every single morning. If you ever want to tune on in, again, it's the second link in the description down below, and I'll see you at market open for our live session. With that being said, I found this tweet to be very useful. And the reason why is that, again, patterns tend to repeat themselves. They do not always have to. I think it's very important to be aware of that. That no, just because in the past before we have seen a sell-off doesn't mean that the market has to sell off this next time. With that being said, I also think it's important to inform yourself of what has happened in the past before. So again, the first rate cut, January 3rd, 2001, we saw the S&P 500 fall 39% in the next 448 days. Unemployment rose another 2.1%. And if you could see, this is 2021. We had record low unemployment, very similar to what we have now. With that being said, we saw unemployment begin to go up. Again, as followed when they began to cut interest rates. And then we also saw the S&P 500 fall 39%. Full disclosure, that is also the dot-com bubble. So it wasn't just that one variable or one factor. There are other factors that often just act as a further negative catalyst. I want to be very open with you guys. It's not just that black and white. There's more that goes into it. With that also being said, first rate cut happened on September 18th, 2007, right around this general time. This is kind of that mortgage crisis, right? The 2008 crash. The S&P 500 fell 54% in the next 372 days. Unemployment rose another 5.3%. This is, again, we had relatively pretty low unemployment. We saw unemployment begin to skyrocket shortly after the first rate cut. And then the S&P 500 fell 54%. Now you have to think the S&P 500 is considered to be not as exposed to risk in comparison to maybe NASDAQ. NASDAQ is considered to be more of higher risk because there's more volatility as it has a larger focus on NASDAQ 100, more of tech companies. Now this is the part that I see to be very interesting. This is where we are right now. The previous circle was pretty low unemployment, but then this was also the pandemic, right? We saw unemployment shoot up, but then quickly correct itself. That was, uncharted territories. With that being said, we are at really low unemployment. We have seen unemployment slowly begin to pick up, and the first rate cut is expected to be on September 18th, 2024. That is when the Federal Reserve is going to host their FOMC meeting. I will be hosting that live stream for free so we can watch the market react to the first rate cut in 2024. Again, this is not something that I expect that as soon as they start cutting interest rates that all of a sudden markets are going to crash. But the reason I found this to be very interesting, and I don't know if it's just me, but you guys let me know down in the comment section what you think. The part that I find very interesting about this is that we do have very low unemployment, but yet everyone that I hear as an individual, they find it relatively pretty hard to actually find a job right now. There's a lot of layoffs that either have been stated that they are coming and or have already happened, and it's generally pretty challenging to find a good paying job. That being said, everyone talks about this thriving economy, but I do not see a lot of people thriving. It's kind of just this weird marketplace right now. On top of that, naturally, when the Federal Reserve begins to start cutting interest rates, if you really think about it, they make it less expensive to start borrowing money, right? For those that are a little bit not too familiar, it's very straightforward. When the Federal Reserve starts to cut interest rates that make it less expensive for people like you and I and businesses to borrow money. So therefore, if it's cheaper to borrow money, we're more likely to borrow more money. And if we're likely to borrow more money, we're more likely to spend more money. As Americans, we like to spend a lot of money as long as it's cheap. With that being said, if we spend a lot of money, therefore we boost the economy. So naturally, traditionally speaking, with low interest rates, our economies thrive because it's very cheap and inexpensive to borrow money, therefore leveraging other people's capital to therefore spend money at an effective rate. The reason, again, we saw a big slowdown, not just on our economy, but also in real estate, is because it was very expensive to borrow money, therefore slowing down the economy and slowing down the housing market. So it is natural for the markets to pick up when we have low interest rates. But it's going to be very interesting to see that if the Federal Reserve does start to cut interest rates, will we actually see an uptick in growth for our economy and the housing market? Or is it going to be the spark of something like we've seen back in 2021, just like it shows here, and back in 2007, where we began to start cutting interest rates? And in the days that followed, again, this is not just one day, this is 448 days after that we saw the markets fall 39%. This is 372 days after, that's over a year, right? That we saw the markets fall 54%. So again, this is not about making an impulsive decision, but about making an informed decision based off of previous patterns. So you are not surprised if all of a sudden we expect markets to uptick, and they might uptick for a little bit as they begin to cut interest rates. I think it's going to be very interesting to see that if in the months that follow, if we begin to see a downturn, then we shouldn't be surprised based off of history that, okay, patterns tend to repeat themselves. They don't always have to, but it's nice to be informed so you don't get surprised if they do begin to. And I think that's going to be the interesting part about this. There's a very common saying in the stock market, and it's buy the rumors, sell the news. The market has factored in this rate cut, over for the past several months because it was expected that the Federal Reserve could have started cutting interest rates as early as 2024. But guess what? Now we're coming at the end of 2024, and they're finally going to begin to start cutting interest rates. So we'll see in the months that follow, and we'll see in September's meeting if the market actually begins to go higher for longer, or if we begin to see some stock market downturn. Again, make sure you guys follow for updates. I do plan to host a free live stream watching the Federal Reserve cut interest rates for the first time in 2024, and I'll be hosting that for free on this YouTube channel. So just another reason to subscribe. If you ever want to tune on into my daily live trading sessions, it's a second link in the description down below, and a friendly reminder, it's a one-time payment, lifetime access, and prices will be doubling starting September 1st. So if you want to get in, better get in now. Appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.